Short time here. So first of all, thank you so much for having me here. And actually, this topic is very close to my heart. And just a quick 30-second introduction. I run a venture capital fund called IvyCap Ventures. We manage about 6,000 crores. We have invested in around 70 companies. We invest from seed to Series B, a ticket size of anywhere between 2 crores going up to 100 crores in a single check. We have invested in companies like Purple, Clovia, Bluestone, Snitch, Miko, Biryani by Kilo, and so on and so forth. We typically would have invested in these companies in very early stages, taken significant minority stakes, like about 25 to 30% in each of these companies. And one of the things that we pride ourselves in basically is to invest through the alumni ecosystem. So the IIT alumni ecosystem actually that we started with, we have the anchor investor for our funds is basically the IIT Alumni Trust. So part of our profits from the fund that we get actually go back as endowments to the IITs, and we also help set up India's first endowment fund at IIT Delhi, and then we are now helping various IITs, IIMs, and other educational institutions to set up their endowment funds, which is a personal passion for me. It's basically, I believe that's something which actually can be used fundamentally to drive innovation across the education system of the country, and therefore building tech ecosystem in the country. So coming back to the topic which has been assigned, and I will just relate my own personal experience of investing, and since I've been investing actually since 2007-8, and now, of course, we are quite actively investing from our Fund 4, which is, again, all domestic capital. So we manage about 6,000 crores, all domestic capital. So a few learnings that I would like to share with all of you. The market has evolved quite substantially over the last, I would say, 15 to 20 years. Especially, we've seen substantial changes happening since 2021. We've all gone through the multiple phases of changes, including what happened during COVID. We saw the first set of IPOs happening with loss-making companies actually going to the market and raising substantial capital. And I think that actually changed the dynamics quite substantially. And as we see now, the new age of startups with the Gen AI actually becoming a big buzzword in most of the investment opportunities that we look at. So I think most of the times I tell the founders is basically don't just use AI, you actually build your solutions around AI. So in fact, as we look at each of the verticals, whether it is financial services or healthcare, or retail, of course, we are seeing quite substantial data getting generated across each of these verticals. Just a few examples. If you look at a company like Purple that we invested very early on, every sale that happens actually is a data point. And similarly, Bluestone, which is a jewelry company that we invested again very early on, every time a customer goes online and browses designs, there is an impression that they're leaving at the time of purchase. And that helps the system learn the kinds of solutions that can be built to actually create something which can be personalized. So interestingly, most of the solutions that are getting created in any of these domains are actually getting very personalized. And that is a trend that we are seeing across each of these verticals, that any of the tech solutions that are being built are basically to personalize solutions. And effectively, we're moving from capital to actually building capabilities, which means that gone are the days when capital was a moat, when people would raise a lot of capital and believe that that will differentiate them. I think given the fact that capital is actually becoming quite abundant, and we've seen the likes of Chandigarh Angels here, and we've seen a lot of angel networks across the ecosystem which are actually supporting entrepreneurs very early stages. Most of the startups which are actually now pitching that as, being able to raise capital, that is no longer the key differentiator. Of course, building capabilities, around the tech solutions that they're building is actually the key differentiator. So that is exactly what we are seeing now. And some of the examples like Snitch, for example, one of our companies, which actually is a very interesting example. It's purely just a small apparel company that just focused on a Gen Z, but focusing on very personal solution for individuals, giving them very smart, clothing solutions for Gen Z. Actually scaled from 100 crore revenue to 1,000 crore revenue in just about 3 years. And that can only happen if you actually really understand your customer very well. And therefore, my suggestion to the entrepreneurs is that spend a lot of time understanding your customers, spend a lot of time in really creating your differentiation, and make sure that you're able to build very strong, powerful capabilities rather than just building capital as your moat. And therefore, build the right partners, and whether it is building your initial team or building a set of investors, choose your investors wisely. And I think that's another thing which not many people understand well. They just try to raise capital and try to get that capital from the first check that they receive. Always wait for the right investor to come on board. And once you've done that, and I think the journey is really long, and make sure that you cater to the right customer segments, and then focus on a profitable growth. So that's what in the given time I think I can talk about. And I know that for a topic like this, one can keep talking on and on.
No doubt.
But this is just in a very nutshell what I wanted to talk about, and very happy to interact with the people around. And please feel free, I'll be around, and very happy to talk to people, and any entrepreneurs who are willing to talk, and anybody raising capital and wanting to discuss. Oh, okay. So thank you so much. Actually, I've been given a little bit more time. So thank you so much for that. Yeah, I think that was the original amount of time allocated. And when I saw that it was actually curtailed, I thought maybe then I had to really rush. So what I will do is, since I've been given a little bit more time, I will give a few more examples of what works. And I think that will be very relevant in order to understand purely from entrepreneur's perspective. So let's take example of Miko. Miko is a companion robot for children. Very interesting robot that actually has created a combination of software and hardware. A very smart founder from IIT Bombay who actually created this AI-driven solution. Now, the solution was created in 2015, and the idea was to really put this solution in front of the kids who otherwise were using these gadgets and smartphones, and then using these gadgets for a lot of other things rather than educational purposes and other things. So the reason actually it's become quite successful is because they were able to really understand their customer very well, because the customer pain points when it comes to the parents who actually want to give the right solution to the kids. So they spent a lot of time with their customers before they actually launched the real solution. So which is one of the key things I would recommend to the founders. Whenever you are starting a new startup, make sure that spend a significant amount of your time, and even if you have to do a lot of interviews with your customers. In fact, my daughter is starting a startup in pet care, which is actually a hardware and a software combination solution. And I think one of the advices I've given her is basically just do about 200 to 300 customer interviews, which is actually what she's doing right now. Just try to understand the pain areas of the customer. Because many times we assume that your customer is actually facing a certain kind of problem, but you will be surprised that when you talk to a large number of customers, the outcome or the solution that they're looking for could be very different. The second thing is make sure that you hire the right people in the beginning, because one of the key things is hiring even smarter people around you and making sure that they are uh, incentivized properly, because majority of the times one of the biggest challenges that we've seen is that people are not able to recruit the right team early on, and there is this urge to retain control of the company and not therefore able to hire the right quality of people. So building the right quality of team and building the right structure around that in terms of the incentive structure on the cap table, how much stake to give to each of the founders. So therefore, very important to get the right team on board. The third piece is making sure that you make the right choice about your investors. And I think that's the point I was trying to allude to earlier, is don't just take the first check that comes to you. I can tell you that a lot of capital is available these days. When I started IvyCap, there were just about 8 funds in the market. Today, there are 1,500 registered funds if you go on the SEBI website. And of course, the competition has increased even on the other side. The number of startups has grown from almost 0 in 2016 as per the DPIIT numbers to about 225,000 today. So obviously the numbers have grown with almost about 40 to 50,000 startups which are seed funded, and almost about 8 to 10,000 which are Series A funded or pre-Series A funded. So effectively that tells you the kind of pyramid with about 125 unicorns is what we're talking about. Our assessment is that India will add about 400 to 500 unicorns in the next 10 years, which means that some of those unicorns could be coming from some of the entrepreneurs sitting here. But actually, the right way to do it is making sure that you get the baseline correct with the right team, right founders, right solution, and closeness to the customer, and making sure that your customer is actually getting as personalized value as possible. So that's pretty much in a nutshell I want to talk about.
I think it's just more than nutshell now. Thank you so much.
Thank you so much
Yep.
for your time, and it's great to be here. And I also want to say that I spent a lot of time in Punjab myself in my early years. I
Lovely.
spent about 6 years in Jalandhar, so learned my Punjabi over there. So it's always great to be back in Chandigarh. So happy to interact with entrepreneurs offline as well. Thank you so much.
Thank you so much. So we request you to please kindly be here in the center. And to do the honors, I would like to request Vikram R. Singh, founder and CEO of Entire Solutions, to please kindly come up on the stage and hand over the token of love from TiECON Chandigarh. We request you, sir, to please kindly be here in the center. Well, ladies and gentlemen, please put your hands together. We request the entire hall to kindly show that the energy is still going on. Come on. Thank you so much, sir.